As you have already heard, I'm from Fintech company TWINO that operates on European and Asian markets as a P2P lending company. And 1 month ago, TWINO Group reached a significant milestone, 1 billion euros disbursed since its establishment from 2009. But today I'm not going to speak about the history of the TWINO nor the bright future of the fintech industries. Rather, I will be sharing with you the challenges which all fintech and ambitious fintech companies will be facing. I would like to raise your hands if here are fintech startuppers actually. Ah, great. Okay, so we are in a minority, but trust me, the information which I will be sharing with you is quite challenging. So in recent years, the financial technologies have completely transformed how we engage with the financial resources and changed the way how we are managing our own money. Individuals need like a simplified and accessible ways of financial services, enabling them actually to borrow money from another individuals and cutting out those financial industries as a middleman. The consequence of such a simplified need in the lending operations give birth to P2P lending platforms. I'm sure majority of you know how it works, where an investor opens an account through the website, deposits a sum of the loan that needs to be disbursed in a loans. Then the platform itself is listing the loans, evaluating the borrowers prior to lend the money. That means that assigning a certain risk category that actually determines the interest rate. And at the final stage, all the payments are handled through the platform. The question is like why individuals are using a P2P lending platforms, because they can actually lend to each other. The answer is that the platforms are guaranteeing the repayment together with the sum of the money and the interest rate if the borrower is late with the repayment. And on top of that, due to the currency exchange rate fluctuations, all the deposits are handled only in strong currencies. Well, seems like a three-step, easy-to-handle business to start with, but all the fintech entrepreneurs need to tackle first challenge is the data science. Platforms are heavily using machine learning and data science technologies in order to evaluate within a second the credibility of the borrower and minimize the risks of the default for the lenders, obviously. That's why fintech companies heavily depend on machine learning, predictive analytics, artificial intelligence, for the reason to actually make decision-making easier. The challenge here is that actually fintechers need to cut down the touch with the customer, not requesting from them any documents, any written signatures or some proofs, and making all these traditional identification methods into virtual environment. In order to achieve that, first of all, you need to deploy a real-time analytics. So, we all know that the data, by its nature, is a historical. And that actually made the complications quite a lot of fintech startuppers, because we need an instant data to assess the credibility of the customer without any issues of the expectancy. Real-time analytics are getting the data about the customer transactions, credit history, scoring, and there should not be like a historical past, obviously. And in risk analytics, data scientists are using machine learning algorithms that are giving them the opportunity to separate the good borrowers from the bad ones. When we're talking about a machine learning, it's like a system that actually determines and learns from the past actions of the customers, making a segmentation on their own, predicts the future based on the variables that has been collected, and obviously not knowing the person physically or not requesting any financial proofs, it's making a decision whether or not the loan should be granted or not. And for that reason, the biggest partners for the fintech companies are becoming credit bureaus. So they are the first, I would say, the input for a machine learning algorithm, which are providing these companies, lending companies, with an instant data about the credit history of the customer, which is combining with scores, and hence the fintech company then decides how to handle this borrower. But the problem here is that not all countries are having open and public resources of the bad debtors. Especially, for example, in Asian markets, banks have created their own credit bureaus, and they are not letting small fintech companies to integrate and get instant information. That's, again, a headache for the fintechers to go back to data science, again implement such an algorithm that enable them to predict the future behavior of the potential borrower. So, artificial intelligence also is heavily used by the data scientists in building up comprehensive customer profiles. The technology is grabbing the information from starting the website visitors, how they behaved on the website, the time they spent there, based on their location, their demographics, every interesting data they are collecting, and at the end, they are offering highly personalized offers that are managed by multi-devices. Bear into your mind that you need to use omni-channel marketing. Why? Because you need to combine data from the offline, from web, from mobile platforms, and track every moves and every events that customer is doing. And your actions should be based on the customer actions, rather than just like sending out the plain offers and throwing out the money in the customer acquisition for no reason. And obviously, these marketing platforms that are gathering and combining such a vast amount of information, then it's offering a highly dynamic contents through the websites, through the email channels, even from the call center, which is based on the customer action, and based on that action they are calling to guide them during the whole customer journey. You will need, obviously, to tackle that challenge. And fraud detection, yeah, it's a major concern for the financial institutions because the fraud is becoming like a huge hassle, not only for fintechers, but still for any kind of financial institution. But thankfully, with the help of the machine learning systems, it's becoming more manageable because the system itself is accumulating all these fraudulent transactions, then modeling themselves and predicts the possible fraud transactions, marking them automatically as a highly suspicious. In a traditional way, fraud detection was done manually, where it was just flagged as a highly suspicious, and it was just terminated. But nowadays, it's through the data science technologies, it's possible to manage and handle. Hence, the ready recipe for the fintech data science is to take a big portion of the risk analytics together with its machine learning systems, implementing a scoring model with real-time data. Then you need to add a state-of-art customer acquisition process together with the best UX UI and provide with omni-channel strategies. And as a pinch of the salt, you need to add fraud detection possibilities in order to segregate unsuspicious moves and the patterns. Someone might think that implementing a state-of-art risk management possibilities is enough, actually, to open up your own fintech, but hold on your horses. Another challenge here is regulatory environment. My colleague already has mentioned. You know that many fintech startups actually are failing at the stage of complying with regulations. Whereas the big financial institutions are having a separate department to handle with such a huge amount of the law. The challenge here is that also that regulatory bodies itself are failing to keep pace with the new evolving technologies, and that's why fintech organizations are operating in a gray area. So anyone who wants to pursue their path into the fintech industry, they need to familiarize themselves with a complex regulatory environment. Starting with the GDPR, which is actually governing the data protection of the European citizens, it actually is responsible for transferring the European Union citizens their private data outside of European zone, which needs a significant resources to comply with. You need to familiarize yourself with a debt-to-income ratio. In other words, is a total sum of the money your borrower can have during the month. The problem here is that not all governmental institutions are providing fintech companies with an open source about the income of the customer. And also, not all the customers have a declared income. So here it's becoming like a struggle and again a headache for the fintechers, how to get data about the income of the customer if I'm not provided or integrated with some resources. Again, we need to go back to the risk management and deploy such algorithms that are predicting the future behavior of your borrowers. Know your customer. Remember that onboarding has a set of rules in order to identify and verify your customer. They are requesting nearly every aspect of customer data, starting from the names, surnames, workplaces, street addresses, even uploading an ID, passport, selfie with a passport, passport with a selfie. So like a huge amount of data. Why? In order to comply with regulation, and it's becoming like a big burden from both sides. From the customer perspective, it's like a big question mark. Why I should trust a newly established fintech company and share my personal data? And from the other side, for fintechers, it's becoming almost impossible, the quick and accessible onboarding. But again, we need to comply with the regulations and demand all of this requested information to comply with the regulatory bodies. Third-party components. Also, besides the fact that you need to comply with governmental regulations, all these third parties, your partners actually you will be dealing with, they are stipulating their own rules. As an example, if you decide to use a Visa or MasterCard for your digital wallet, simply you need to play with the Visa and MasterCard rules. And that applies for all kinds of third-party components you will be dealing with. Also, it might be a problem that they do not have an API protocol with which you will be sharing the information, and you need to write for them. So it's like a big hassle and needs significant resources. Besides keeping a personal data, investors, customers, everyone are interested how you're managing your data governance. Who is monitoring, how you are securing them, and actually who is responsible for the governance logs. And identity theft protection. There is like a non-negotiable that fintech companies need to take a security-first approach by deploying multi-authentication methods. Nowadays, in 2019, the authentication method as an SMS can be passing a licensing and some degree of the regulatory musts, but bear into your mind that many fintech and cyber experts already warned us that SMS is no longer viable, and in the future it cannot be perceived as a multi-authentication method. So when we are talking about the security, unfortunately, small fintech companies are becoming a target point from the attackers, from the cyber attackers. Why? Because they possess a very sensitive data about the customer. And unfortunately, not all fintech companies have a luxury to protect and secure their data because it needs a significant financial and human resources. For example, moving target defense can be a frustrating point for your cyber attackers, but again, it needs significant resources. And hence, after talking about this huge amount of data science and regulatory compliances, you need to gain a trust in the customers. So it's to build the credibility. besides the fact that the fintech has like a destroyed and changed many business verticals, still it's an emerging market, and still a lot of customers still are looking with suspicious due to the reason that there is a lack of trust, a lack of security, or simply just like as they prefer to use traditional financial institutions. But banks have spent decades actually to build up customer loyalty, and fintechers must be a bit patient about building a trust within their customers. But what I suggest is to do to talk to your customers, share with them the knowledge, educate them why they need to use your product and what is beneficial there, rather than just like sending out a plain text. And to be honest, as a final note, I will tell you that if you still decided to open your own fintech business, even after this talk, remember that the aim of the game is to keep things simple for your customers. The road ahead will not be full of rose petals, but constant research and planning may help you out to overcome the obstacles. While implementing a lot of analytical and data science techniques, it's becoming kind of soulless organization, fintechers. But if you will keep at every new technology and business processes the customer experience and the needs satisfaction of your customers, then keeping a happy customer should not be a hassle for you. And at last, don't forget to invest in real persons. Because customers still need some degree of the direct engagement and to showing them the support during the whole process of the customer journey. Why? Because not all kinds of artificial intelligence and machine learning systems can replace that human touch. Thank you very much.